Okay, so today we're going to talk about trading strategies. Uh, did you guys see the video? If you did, you probably understood the gist of the entire call. We're just going to
Uh,
explain it in slightly more detail. First of all, yeah, can you hear me?
Yes, we can
yes,
hear
yes,
you.
yes, we can hear you.
Yes.
Okay, cool. So, why do we need a trading strategy in the first place? So, as I explained slightly in the first call that we had yesterday, nobody really knows what the markets will do, right? That's a lie. The markets will go up, they will go down, they will open here on Monday, they will close here on Tuesday. That is all basically a lie. What you can do is have a probability. There's a probability which could go up to 80% in certain cases or 90% in certain cases that this should be what happens, right? So you don't exactly know what's happening. Now, the problem which most beginner traders face is they are unable to rectify their mistakes. So you can keep doing the same thing over and over again, but trading doesn't give you right feedback. The only feedback you get from trading is whether your trade worked out or no. But then you have to learn from them. So how do you fix that? So if you took a trade today and then it wasn't a loss, maybe your analysis at the end of the day when you're reviewing your trades could be something like, oh, I should have held on to my position, or maybe I should have had a wider stop loss, or I should have done X, I should have done Y, and that's it. However, that doesn't really help you in the long term because the stop loss that you've currently placed, let's assume it's 40 points or something. Maybe that works well for all your other trades. You're basically just guessing at this point, and you aren't learning anything new from your trades. So this can be a big issue. So if you have no data to improve on, how will you get better? This is where a trading strategy comes in. So what I would like you guys to stop doing is looking at the charts and thinking, okay, this is where it's at now. Let me just buy a call, or sell a put or whatever you want to do, or have some bull call spread or something of that sort. Instead, you should have specific reasons as to why you are going long or short. So that assume you have four steps, right? So I will go long on a stock on SBI because there's currently a gap there. It has touched that gap. I know the push upwards happened because of a fundamental factor when its results came out. And if there is any dip right now, that could be basically due to the market falling and SBI will fall along with it. However, the other indicators I have all suggest a buy. So one could be my support and resistance level because of the gap. So it's above that. Okay, that's one factor. Another factor could be whatever indicators you use. It could be the RSI, it could be a moving average indicator, it could be something else entirely. And the charts look bullish to you. Now, once you have, guys, please mute your mics, yeah? I can hear someone cooking. Okay, so once you have these factors in the equation, you take a trade. Doesn't mean it doesn't work out. Now, when it doesn't work out, you have something substantial to work with. Okay, you know what? My RSI, the RSI at this particular point of time was at 90 or whatever. Assume it was at 30 when you went long. Okay, so this is a problem. Maybe I could modify this. What if I had gone long? What if my criteria had been I would only go long when the RSI was above 50? Then maybe I wouldn't have taken this trade and I would have saved some money. Now, let me backtest and see how this goes. Every time the RSI was above 50 and the same factors, the same factors occurred, what would be my success rate? Now, it doesn't have to be extremely extensive. You don't have to go back. So, ideally, you have to go back and check your strategy across all market conditions. However, maybe you should use a smaller sample size because at least the current market conditions will favor what you see right now. So since currently we're in a bull market, even if you analyze the past couple of months, whether you do it using an algo or like me, you do it manually using a notebook, either thing works. At least I figure out a probability of success. At least I know that this strategy will work 70% of the time. Now, since I have this number with me,
Excuse
hi, can you hear me?
Yes.
Yeah, we can.
It's clear.
Yep,
Yeah.
loud and clear.
Okay, cool. Okay, any doubts so far? So far, what we've talked about is the importance of having a trading strategy in place for the only reason that at least we can make proper judgments, right? And we can make improvements, incremental improvements in the way we trade. We have something objective with us, along with the subjective, which helps us analyze our trades better. As compared to just saying, I should have just had a wider stop loss or I should have waited for longer, you will have something concrete that, okay, when I employ this particular strategy, this is what I do,
I have a
right?
couple of questions.
Apart from how to create a trading strategy, because we'll get into that in the second part of the call. Right now, we're just talking about the importance of why you should have one. Yes,
I
continue.
see. No, so I think like if we're coming to come to it later, we can have it later. The question was you said you should calculate a probability of your win. Like how
Hmm.
do you quantify your probability? Let's say I back tested
Yeah,
it over 50
that's
days.
that comes
Like,
later, right?
okay,
Yeah,
cool, cool, cool.
we'll
Yeah,
come to that
just
later.
one thing, a terminology. What's a gap? I've seen people use it. I don't know, or I can just
Okay,
Google it as well. Yeah.
I mean, a gap is just look at SBI's chart, right? When there's a gap, there's no candle in the middle, but there has been a gap up opening, right? Like today, you had a
uh,
gap down opening in Nifty, right? There's a
I
gap in
got
the
it.
middle. There's no candle in the
Okay,
middle. That's
okay,
it.
okay. So that's all. So when you say candle, is it some time they're looking at like a 3 minute, 5 minute, 15, or just from like what time period candle do people look at when they say gap?
Anything over 5 minutes. I don't
Okay.
recommend anybody use anything smaller than that. 4 minutes, 3 minutes, 2 minutes, 1 minute. They're all crap. 1 minute, sorry. They're all crap
Mm.
because there's so much volatility. It's impossible to glean any information from that, right? And whatever we say, it has to make sense to you. It has to make logical sense. So if I've mentioned the word gap, and suppose you understand what a gap is, but why is it important? That's more important to understand. Understand the why more than the words being used or the terms being used. So why is a gap important? Anybody?
So it's a direction of movement, whether upward or downward, as in
Also,
momentum.
also it acts
Hmm.
as a good level for support and the resistance.
Yeah, but why does
Okay.
it act as a support or resistance? Like, what's the very logical explanation behind it?
Gap usually happens after overnight, like the market opens. So if there is a gap of opening, there is something in
Mm.
the market because of which the stock price is very up. So
But
now,
that can be very, but that can be anything, right? Like it could be
yeah,
something temporary as well. So lockdown happened as a gap down opening, but will that be
So
respected in the future,
a lot of
right?
people want to buy or sell the stock in that particular moment.
Okay, so the most basic thing about
Supply
gaps
demand.
is the fact that there's a gap. Since there's a gap, since there's no candle, that tells you there were no buy or sell orders executed in that region. So people won't really have stop losses at that point. People haven't really placed trades at that point, which is why you keep hearing the expression the gap will get filled quickly. Now, assume it's a regular candlestick chart and people have placed buy orders and sell orders at every single point of the day. So there is a tendency that somebody else will have a stop loss at that point or a target point or a target price at that point. But in a gap, people usually don't, since there are no buy or sell orders which took place during that period. This is why gaps are important, right? Very basic, very
I see.
sensible.
Just one thing. Will does it have a minimum quantification that if there is something will show, or it's just even if someone makes a single trade, it'll show up?
No, so if there's a gap, if there was single trade, it would show up. So there's nothing which
Got it.
happened there.
Got it.
Yeah.
can you please
Okay.
elaborate
So now,
about it, or we can
One
discuss
more
later
question.
if you
Is
want?
it necessary for a gap to be filled?
no, not always. Again, there is nothing in the market which is necessary, right?
Oh, all right.
Right. There's absolutely nothing which is necessary. So, for example, Modi could shut down the country tomorrow, and we could have a gap up opening. I mean, anything can always happen. There are no guarantees in the markets that this will always happen. All I'm
Got
telling
it.
you
Got it.
is understand why stuff happens, and then you can use your own brain and analyze things in your own way. Okay. Okay, so let's come back to how to create your own trading strategy. And this is your assignment for this week. So your deadline will probably be maybe by Monday midnight. So I want you guys to start creating your own trading strategy. So there are three basic steps here. One, establishing a premise. Two, backtesting your data. And three, refining your strategy. Right? Now, coming to a premise is a set of conditions which have to be fulfilled before you enter or exit a trade. Okay, before we even begin, let me just explain that you can have multiple trading strategies, right? Most most traders don't just have one. Some do, but then they take very few trades or something of that sort. So you can have multiple trading strategies for every aspect. So when you want to go long in an index, you can have five strategies for that. When those five strategies, whatever conditions those five things have, when they are fulfilled, it's only then that you will go long. You won't go long randomly just because you have a gut feeling. Because as we know, we aren't really experts at reading the charts. And even if we are pretty sure, the opposite thing can happen, right? Okay, so the first thing is establishing a premise. A premise can be anything you want. Just make sure it's very logical. Just make sure it makes sense. Even if you explain it like a 20-year-old student who has no idea about the financial markets, you should be able to explain to him why this is logical. So a premise could be something as easy as this. When the index or whatever stock, whatever it is, breaks the previous day's high and the index is also moving upwards, the index is positive for the day, I will go long. Right? This makes a lot of logical sense. Okay, so yesterday's high, that was the highest point the bulls were able to push it to. Today, the bulls were able to beat that high, maybe with higher volumes or something. And I expect this trend to continue, especially because the market will also support this stock. So a premise should be something which is very logical and easy to understand. Okay, rational reasonings behind it. So you can have a bunch of these premises, you can have a bunch of these conditions which have to be fulfilled before you take a trade. Okay. The other thing to keep in mind is I want you guys to have objective and subjective indicators both. This is, I mean, this really does depend on you. However, for most beginner traders, I really think you guys should use something objective instead of just taking trades randomly. The experts can still, if you're profitable, that's what I mean by an expert. If you're profitable, then you can do whatever you want. You can take trades based solely on price action. But otherwise, for most people, especially beginners, I think it's a good idea to have something objective right there. So, for example, the RSI indicator, right? The RSI indicator spits out a specific number. If it's 80, 90, 91, 100, 0, whatever it is, and you can make something around that strategy. Again, there's no hard and fast rule, and you can keep it pretty loose. You can even have a range. When the RSI is above, in the range of 50 to 70, I will go long. Because if it's over 70, what I've seen during backtesting is that the trade doesn't usually perform because the market's already overbought. Right? This could be some conclusion you come up with. So have a bunch of these premises, for whatever you're comfortable with, and then backtest the strategy. So for example, you come up with this thing, right? If the previous day's high is broken and the index is moving upwards, I will go long on a particular stock. Along with this, the stock has to showcase, has to be beating the markets over the past couple of weeks. This is when I will take an intraday or a swing trade in this stock. Now you go and backtest this over time. Again, in the beginning, you can't really be expected to go back to 20 years and then backtest it through all time frames. However, that is the eventual goal. So eventually, you do want to have a strategy which works across all time frames, or at least as much as possible, right? So you'll probably have to go back to 2008 or something to cover recession, bust, booms, stagnation, accumulation, all those different phases of the market. If you guys aren't sure what the phase of the markets are, we have a couple of posts in the ISB wiki about Dow theory. Please do read that. So then you can go back and backtest it. Again, backtesting can be done with the help of an algo, or it can be done manually. So you can just go back in time, see, and note it down. Okay, fine. This trade, if the conditions are fulfilled here, the first time it worked, I made these many points. When did I exit? I exited at the end of the day. Okay, second trade, what should have been the best case scenario? The best case scenario would have been that by 3 p.m. or something, or whenever you have a giant pump, or whenever it reaches an important resistance level, that's when you should exit a trade. That would have been the best case scenario for this particular strategy in this case. So you can keep doing this over and over and over again, at least over the past month. That's the smallest sample size which is acceptable, to 20 trading days or a month. And then you'll figure out a probability of success. You'll figure out, okay, fine, this trade works 30% of the time, so this is crap. This works 50% of the time. Okay, as long as you're hitting 50% or 60%, you can move on to the next step. And the next step is just refining this trade. By refining this trade, you can add additional indicators, you can remove certain indicators, you can add something more related to price action if you want. You can select a few stocks in which this worked better on. So maybe you test this strategy for SBI and HDFC. It works better in HDFC Bank, right? So you can maybe just focus on HDFC Bank then and backtest that over time for a longer time frame. Now move on to two months and see how the trade performs. And once you see something is profitable after accounting for brokerages and everything and slippage, then you can put it into action, right? The details of how to create a trading strategy are already there in the video. Now that you've had this rough explanation, the video should make much more sense. Any questions?
Your
So just
strategy, is it
simply
like just asking how often do you like, not like it's not necessary, like how do you buy and sell? Do you do it multiple times a day, or it can be just like I open a position and square it off, like enter, re-enter, enter, re-enter? People would do everything, right?
No, I don't enter and re-enter. I don't take too many trades a day because again, I have limited strategies. I have around 15. So whatever gets fulfilled first, if I see the probability of success is high enough, if price action is confirming what I think, then I will take that position. And once I take a position, I will hold it until it hits stop loss. I don't usually make major decisions in the middle of a trade because unfortunately, when I'm in a trade, you waver quite a bit. It does go into overdrive, right? You keep thinking about everything and stuff like that. So I tend to not make decisions once I've entered a trade. Yeah.
So your voice got cut in between, so I didn't get the part. Like, let's say you entered today, you usually don't keep it overnight. So once you've exited, you don't enter again. That's what you said, right? The voice got disrupted in between. Sorry.
No, I mean that's different. If the same strategy, if the same conditions get fulfilled again, I'll enter again.
Okay, yeah, it's fine.
Yeah, you can use it multiple times.
So I have
First,
one question.
first,
Yeah,
Hello. Yeah.
yeah,
So
yeah.
where can we backtest this strategy?
Size, like if do you have any strategy
Wait,
where
wait,
you
guys,
might
guys.
say
Multiple people are talking at the same time. Please mute your mics. There's a lot of echo.
can you hear me now?
No, there's a lot of echo.
if you have your phone or laptop on your surface, can you put it up?
Arun, if you put your earphones on, it'll be right. Echoing.
Wait, I'll connect.
Yeah.
Yeah, much better now. One at a time, please.
The question is where can we backtest this strategy?
I mean, you can just look at the charts, right? So, for example, if you're looking at SBI, you have all the data of SBI throughout time. So you can just scroll back candle by candle, and then
So
you
we do
can
it-
make your
so-
assumptions.
So we do it visually.
Visually, what do you mean by visually? You have a certain
Means backtest is
view,
usually
right? So you'll be looking at all those numbers and everything.
backtest is usually a quantitative activity, isn't it?
Mm-hmm.
So let's say someone doesn't have a programming experience or expertise. How can we go
Mm-hmm.
about backtesting it?
I do it manually. I can't program at all. I mean, if you guys have been on a Discord server, you know me. I can't
So
do
you-
anything with a computer.
So
I do it
you-
manually. I have diaries.
Okay, so it's more visual at your end. Fine, I got the idea. Thank you very much.
Yeah, I do it manually. Yes.
Just one thing, Energizer, if you know what language do people use? Usually, like I can maybe start in something and realize that's not best suited.
Python.
Or if you're using TradingView, so TradingView has its own proprietary language called Pine. So you can
I
use
see.
Yeah,
it for
but
backtesting.
but just use Python. That's much better.
Okay.
Yeah.
I have one question.
Uh,
So
I have a
recently,
question.
for the last 1
Do
week,
you have any strategies where you might say, let's say, I'll buy like 4 lots, but in some strategy you'll buy 1 lot. How do you decide that? If you do
No,
have that
I
steps?
don't do that. I have a fixed lot size. All of my trades are with that fixed lot size. Right? Because again, during a trading session, I want to minimize the amount of decisions I make. I want to have my homework done already. When I am trading, I have everything set out already for me. My work is done before. The night before, now, during the weekends, this is when I'll study. This is when I put in the work. During trading session, that's just the game. You're just playing, You aren't using your brain as much.
okay.
How
So
do you handle all-time highs
How
or
do I
all-time
handle
lows?
all-time highs? I mean,
Like,
what do you mean?
because if when a stock, like currently our market is like at all-time high and there's no support or
Mhm.
resistance, so how would you go on deciding that where should be your target or something? Because all the indicators would be showing, for example, RSI, it would be always obviously at the high, like 80 or 85 points. So that does not mean you're supposed to short it, right? So if
No,
a stock,
you can look at different time frames, and during any particular day, the RSI will move from here and there, right? So when you change your time frames, the RSI indicator will change as well. If you're looking at a very long time frame, yeah, the RSI might be overbought, but on a 5-minute time frame, the RSI will show you something different. So that's not a problem. Yeah.
How micro should we go in terms of time scales? And
Sorry?
what's the linkage? How micro should we go in terms of time scales? And how is that related to, let's say, I mean, the average duration or how long you intend to stay in the trade?
So what I would suggest is always look at multiple charts, always look at multiple time frames. As I've mentioned, less than 5 minutes is useless. So 5 minutes is where I place my entries and exits. However, for analysis, I will use the 4-hour chart quite a bit. I also use a 75-minute chart sometimes. Yeah. I do look at all time frames.
Got it.
But again, most of that is done before the trading session. So during the day of the trade, I usually have just the 5-minute chart open, and every hour or so, I'll probably look at the 4-hour chart. But then I already have memorized the 4-hour chart the previous day, right? So again, I don't take trades randomly. So for example, if news comes, okay, let's assume it's the first day of the month, right? I've already made whatever X amount of money from the previous month. Today is day 1. So I'm starting off with zero profits. And let's assume there's been a big breakout in SBI today or any bank. I won't take a trade because I haven't studied it the previous day. If I have to take a trade, I will need information. If I have work done beforehand, then I will take a trade. Otherwise, I won't.
So, when you say studied, you mean that particular stock or some pattern like the stock is showing?
That particular stock, because everything is different, right? Every stock is different. Every chart is different. Every chart tells you something new, something different. So I don't go in blind, this is what I'm trying to tell you.
Sir, I have one question. For us, for someone who has a full-time job, who does not have access to the screen all the time, is non-directional strategies better for him?
Not really, because even if you can't sit in front of the computer for the entire day, it doesn't mean you can't take a directional trade. You'll probably have to increase the time frame. So it'll probably be best for you to take swing trades instead. Because in swing trades, like you'll have a session with Lumia Man soon. He has a full-time job. And he just needs to look at the charts once every couple of hours, 2-3 hours. And that's it. He's good.
Okay, so if we ignore the last 2-3 weeks, markets usually are non-directional, right? If we look at the indices. So can we make a good amount of money by only using non-directional strategies?
Backtest it and see. This could be your assignment.
Okay, fine. Thank you.
Yeah, every single day of the past month or past 2 months, pick out a non-directional strategy and then see how it goes.
All right, I'll do that.
Yeah.
Okay, so Enlance, I say if you don't mind, like if you're free on the weekend, could you like send us your trade setup, like what type of indicators you use and what all do you
I
watch?
don't use any indicators. I
Okay,
don't use any indicators. I just trade based on price action. Yeah.
okay.
can you talk more about price action, or will that be later?
Oh, what do you mean talk about price action?
Like, explain what would you like look at a chart, like when you see it, when you want to take a trade.
Uh, Again, so I think this comes with experience more than anything else.
Yes,
You
but
have
where
to
should you
feel
begin then?
there's I mean exactly the question is that, which is why I'm telling you guys to use indicators.
All right.
Because in the beginning, especially, indicators do act as a crutch, right? I want you guys to get to the point where you can feel the markets. There's something Sexyribbon was talking about today itself in another one of his sessions, that you have to have a feel for the markets. What do you think the markets are about to do? What do you think the trend is going to be? It doesn't have to be exact, but you should know whether the day is going to be trending, an uptrending day or a downtrending day. With a certain probability of success, you should have a feel for the markets. And if on a particular day you don't have the feel or you're pretty confused, then it's probably best to not take a trade, right?
Understood.
Yeah. Going back to the cricket analogy, which we used yesterday. So you're basically batting here, but you can't get out in trading unless you take a shot. You can miss as many balls as you want, and that's fine. There are balls thrown at you every single second. The market moves every single second. It doesn't mean you have to hit that shot. You can wait for the perfect shot to happen and then take a shot. For example, you can choose to only hit full tosses, right? So you can maybe have just one strategy, but just use that one strategy because you know it works. It has a success of 60% or something. So since you know the probability, since you've backtested it long enough, you know that, okay, I took a trade today, I was in a loss. It's fine. Tomorrow, loss. It's fine. Day after, loss. It's fine. I know that with every day, the probability of success actually goes up in my favor because of reversion to the mean. Right? So
NHS, I
Yes,
have a question.
got it.
Yeah, more of a question. It's like a request. Like, can we have a live session on the back testing? What, like, how you do the back testing? You know.
I mean, I can send you photos of my diary if you want. That's what
Yeah,
my
like,
live backtesting is.
yeah, like I'm like completely a noob in this. So, is it better if I go and watch videos on YouTube and like, if I have any doubts and come back to you and about the back testing and all?
Yeah, you can, but again, it's not complicated, right? You just have to create a premise, something you
Okay.
believe in. So it could be something
Okay.
as simple as when the first 5 minute candle, right? When the first
Okay.
5 minute candle is broken upwards, I will go long. That's it.
Okay.
And then backtest it more time, see how it works.
Uh,
So it can be very simple.
is there any place where we can export the historical data? I think NAC, does it have it? I haven't done this before.
I think you can
I
go
don't
in NSC
just go on
options.
Kite, right?
Okay,
Just go on Kite and then you can see all the past data.
do they let you export it out? Like I'm gonna use a computer program. I'm not gonna do it by hand. So
I think we have all the historical 5 minute data on the Algo Trades channel on the Discord server. So you can just get all the
okay,
data from there.
okay. Thank you.
Also, is there any place where we can get the historical option data?
Historical option data, I'm not sure. I don't really look at the option chains.
NSC.
Not the option change, but the option contracts only.
I'm not
I
sure.
think you can. It is downloadable as a CSV file on NSC.
You can ask the guys on the Algo Trades channel.
So let's say we develop a particular premise, right, or a particular strategy. Do you expect that strategy to work across companies in the same way which belong to the same sector, like HDFC and SBI you mentioned? Like, why would you expect like the objective indicators to behave differently for SBI and HDFC, given like there's no differences in the individual stocks and the banking sector remains? There's no shock to the banking sector or any factors affecting the banking sector as such.
Okay, so let's just stick to this example, right? We'll just stick to SBI and HDFC Bank. Are there differences here between these two banks? So the markets move, as I mentioned, based on fundamentals and leverage positions. So will the fundamentals differ for both these companies, despite them being in the same sector? Yes, because SBI Bank has a completely different business model as compared to ICICI Bank or HDFC Bank. ICICI Bank, for example, caters mainly to large clients. They cater to companies. So if you're a company who wants a loan, you'll probably get the best service and everything from ICICI Bank. However, if you're a regular retailer, retailers have most of their money with HDFC Bank. HDFC doesn't give out huge loans to one or two clients. They like to keep their entire order book fairly well managed and spread out. Now, as you know, with retailers, they are the people who don't default on their loans as much, especially since they all lead different lives in different spheres. So there is a subtle difference. So everything will affect them differently. So for example, if there's a problem and the agriculture sector or the government announces that the pension plan for government employees will now increase, that will directly affect SBI. Correct, since most government employees have an account with them. Will that affect HDFC Bank? No, it won't. However, now suppose something like this where the general. Hello? Can you hear me now?
Yes, we can hear you now.
Okay, so I don't know where you guys what you guys heard from the last monologue.
What I got was mostly like the differences like between how a government bank works versus how a private bank works. So generally, I would expect like banks like ICICI and HDFC to work similarly, like indicators for ICICI and HDFC to work similarly. But because there are fundamental differences with PSU banks that would work in a different way.
Okay, you heard, I think, half of it.
Right.
So even the point I was getting at is that every single company is different. ICICI Bank and HDFC Bank won't always move together. Since I mentioned ICICI caters to corporations, right? So if the government has a law out now which makes it easier for corporations to borrow, ICICI Bank will move way more. Does it make sense?
Yeah.
Yeah. So these are just examples I'm giving out. The main thing I want you to take away from this is even if you have two companies involved in the exact same business, they could be very, very different. And they always are different. Right?
Okay, so generally you pick a premise and see if it works only for a particular stock, right? So you have multiple premises and you backtest each of those premises on a particular stock to see which one works well. And it's not the same that premise will work effectively for another stock. You might need to shift strategies.
Yeah, you might need to tweak it. Yeah, that's step 3, right? Refining.
Okay.
Yeah, so I could give you another example to make it even clearer. Suppose currently the government in this budget has made it very clear that for the first time in India's history, they will support the private sector. Right? They will actually encourage businesses, which has never happened before, which is why the budget was such a big hit on that day and will continue to be so because they send a message out. So in cases like this, you can see your the banks which lend to corporations, they could be on a more bullish upswing compared to the rest. So maybe their RSI, the average of their RSI hovers around 60, whereas for HDFC Bank or some other bank X, it hovers around 40. So you'll have to refine your strategy based on the stock. Make sense?
Got it. Yeah. Thanks for
I have a question.
Mm-hmm.
Should you first make strategy, try to apply it on multiple stocks, or to select stocks and then try to make a strategy?
I think for now, if you guys can just stick to indices if you want, right? It'll make it easier. So I want all of you guys to have your own premise, discuss it among each other, make sure it's sensible, and then go ahead and backtest it. Give me some results by Monday.
But in general.
Mm-hmm. In general, what?
In general, you prefer making strategy and testing, selecting, try to figure out a strategy. Or
Yes.
the second.
Your voice is getting cut in the middle. I can hardly hear you. I can hear like one word. Maybe you can type it out and somebody else can read it for you.
No. I was saying, would you prefer selecting stocks first and then trying out different strategies, or first select strategies?
No, first decide on a premise first. Something which makes logical sense. Your foundations have to be strong. Right? Then you can see which sector, which stock it works on best. That's later.
Okay.
Yeah. Okay, so another thing I wanted to get into was, so I initially struggled with reversal trades. I still do. I have a big problem in reversal trades. My probability of success in those trades is extremely small. And I had to figure out a way to make sure I can take some reversal trades without losing a lot of money. So, which is why I made a couple of strategies for taking reversals. So now I only take reversals when those two premises are fulfilled. So one could be something like, I will only take a short position once the market hits an important support level or resistance level on a 4-hour chart. Because the higher the time frame, the more important your support and resistance lines becomes. So on a 1-day chart or something. So I'm looking at a 1-day chart. If it hits that resistance level, it's only then I will take a short trade. I won't take a short trade in the middle. I won't take a reversal trade in the middle. Right? The other thing I have is called a double dip strategy. I think I have another YouTube video out on that as well. So it's basically when the price gets rejected from the same level twice. This is something which you could see in Bank Nifty today. Nifty and Bank Nifty both. If you guys remember the charts of today, it went up to a certain level initially, and then you had these two small hits. Only then that the price fell down. Correct? That's when you had the big red candle which pushed Nifty past 14900. So I made the YouTube video about 3-4 months ago. And you can see it played out pretty well today as well. Yeah.
When you talk about important support and resistance levels, so do you look at the high and lows of the candles, or do you look at the round numbers?
Round numbers also are pretty important. However, I pay a lot more attention to the highs and the lows and where the markets turn from.
Okay,
What
and
I'm
you look at
basically
the
trying to judge when I'm drawing support and resistance line is what are the big boys doing? What are these guys doing? Because these are the guys who push the market upwards. So if Nifty goes all the way up to 16,000 tomorrow and then it falls down from there must be something important about the 16,000 level that they stopped buying from there and the bears came in. I'm looking at charts to basically tell me what the behavior of the big boys is. That's what my support and resistance levels are all about.
Okay, and do you give importance to the wicks or the body, like when you draw your support and resistance?
Both. They both matter.
But if like we are beginners, so what would you give, suggest us for preference?
Again, you can use both mainly because understand support and resistance lines aren't really lines, they are zones. They are 20, 30, 50 point zones. Anything can happen in this range. It isn't an exact line, right? But the markets will touch exactly this level and something will happen.
Okay, so we should consider them as a range. Understood. Thank you.
Yeah, it's
Just
always a
wanted
zone.
How,
All right.
how do you figure out zones by yourself? I usually use the money control app, which just tells me for different series these are the zones. Use something like that, or there's some like a way
No,
to.
I mean I don't depend on anybody else for my trades because then it's not my fault, right? If the trade doesn't work out, the the fault lies with the guy who gave me those lines. So how will I learn from it? He was wrong, I wasn't. So how will I improve the next time? So I have to draw my own lines. At least then if it's wrong, I know it was my fault and I just need to improve the way I draw the lines. Make sense? So I drew a line at 15,000. However, Nifty reversed from 15,500. Okay, I messed up. Delete that line, put a line at 15,500 and see how it behaves in the future.
Just one thing, like what should I Google to read on how to create your own, like how to figure out support and resistances from charts? I don't know how to do that.
You could just look at our YouTube videos. I have webinars on it as well on
Okay,
how to draw them.
okay,
Otherwise, you could go to the Google Drive that we have. There's a
okay,
course by Naveed. What's his name? Uh, I mean, his name is Naveen, but his course's name is Urban Forex, I
okay,
think. He explains support and resistance pretty well. He's got 1 hour sessions on YouTube as well. So you can go to
okay.
the YouTube thing, or you can just go to the Google Drive, ISB Google Drive, and you can just download his entire course for free. Yeah.
Thank you.
Hey,
This is
yeah, it has been noticed like if a strategy is well known, if it becomes famous, then it stops working after a while. So can this be also applied on price action? Like they can be a trap for the price action, like false
No,
breakouts and all.
no. So that's the one thing which people can't hide, right? You can manipulate everything in the markets. The only thing you can't manipulate is the price. So everything else can be manipulated. So read this book, Bulls, Bears, and Other Beasts of the Stock Market. It's by an Indian author. It's a very fun read. So even if you don't like reading, it will still be okay. It's about, I think, 200 pages. Should take you about 6 hours to finish. That's it. And it explains how everything you see on a chart is how it can be manipulated. So, for example, when it comes to volume, we know recently, just last month, the head bank of Germany, Deutsche Bank, they faced a fine, right? Because those guys were manipulating the volumes of certain stocks. So what they were doing is they suppose Reliance is at 2,000, they would place a buy order for 3,000, knowing that that trade won't really be executed. However, it will cause a huge spike in volume, and people might buy based on that. So there's a lot of this manipulation which happens everywhere. With FIDI data, we all know it's completely manipulated. Especially initially, it was a complete epidemic, mainly because people view foreign money coming in as something important. Like if US money is coming in to India, into Reliance, there must be something special about Reliance, which is why they've scoured the entire world and then ended up with Reliance and invested their money there. However, what we know instead is what happens is these guys all have offshore accounts, and most of the FI data you see could just be the promoters themselves putting in some of the money abroad and then pumping it back to the country in terms of FII data or FII inflows in order to make the public believe that the price is that the company is doing something important. and people should buy, thereby boosting their own share prices. And as we know, all the top executives, that's how they make their money. Their entire uh, their entire package revolves around the share price as well. They make more money if the share price goes up. So they'll do whatever they can to make more money, right?
Okay.
The
So I
price, however,
got this.
you can't really do anything about the price.
Yeah, I thought of this also, but I like, if I give an example like of a false breakout, like if we
Mhm.
see like this a triangle pattern or a channel pattern, and if it breaks the resistance level, so it will give you a breakout. But what if it's a false breakout? Then we don't know if it's a retest or it's just a false breakout. So like majority of the breakouts are false,
Okay, so
right?
one thing, let's start off with, why do you draw channels? Can you explain to a 10-year-old why a channel is important?
Like it's like when when it makes higher high, there then becomes the supply zone,
Why? Again,
because
using supply zone. I'm a 10-year-old. I don't know what a supply zone is. What's the logic?
maybe
For
the
it, okay, let me start first. I draw support and resistance lines, which are which are regular lines, right? Now,
yeah,
why do they work? I can explain it to a 10-year-old. Okay, so assume you want to buy a phone. You want to buy the new Apple iPhone, and currently it's selling at 50,000. Okay, you think it's a good price, and then you buy, and then the price moves up. When it moves to 1 lakh, you think it's too expensive, and then you stop buying, so the price falls down. So do you know why 50,000 is important? Because if the price is 50,000 again, people will buy the iPhone because they think it's a good price. So which is why every time the price of the iPhone falls back down to 50,000, it should go up. And each time it goes up to 1 lakh, it should fall down. Everything else remaining the same. I think a 10-year-old should understand this. Now a channel, you can draw a line anywhere, right? Any 2 points. Find any 2 points and you can connect them and it'll become a line. Doesn't mean it's important, right?
yeah.
So I see all these charts with channels and triangles and this and that. Unless you can explain it to me, I won't believe it. So unless something makes fundamental logical sense to me, I don't believe in that, despite what the experts or YouTube guys will tell me.
Okay, so what patterns do you follow in price action?
None.
No chart patterns.
No, they don't work, especially in a 5-minute time frame, which is what I usually trade in. Now you can go back and test the head and shoulder pattern because I have backtested this, so I know. Whenever you see a perfect head and shoulder pattern, it will always fail. The opposite thing happens. I've backtested this out, so I know, but you can do your own research. Yeah. Just look at a favorite pattern, look at the ascending triangle or channels, and see how often it works. You'll know the truth. Yeah.
So Energize, could you like give us an example of one of your strategies, like a recent trade or something like that?
A recent trade. Okay. I recently took a trade on HDFC and HDFC Bank, right?
Okay.
So I have a pair trading strategy. In what I do in this case is I know both these banks have this tendency to go together, right? They're pretty
Okay.
correlated.
Yeah.
HDFC and HDFC Bank, the twins. When one moves up, the other tends to move up as well. So I think this was last week or something when Bank Nifty was moving upwards. It had a really good day, and both
Okay.
HDFC banks were moving upwards. So what I did is I longed HDFC Bank because that was stronger, and I shorted HDFC.
Oh, okay. Get
Yeah,
it.
and
Yeah,
the stronger stock kept moving upwards. HDFC Bank did move upwards, but didn't move upwards as much, and I pocketed the difference. Easy.
Okay.
Yeah, that's one. Now again, I already have the video on double dip reversals, right? And I think you can
Yeah.
apply today. It worked today pretty well because I got a message from one of my buddies that yeah, it worked.
Okay.
Mm.
So could we have a copy of your diary?
Copy of my what?
Your diary, where you
Yeah,
written down all your
yeah,
stratagems.
yeah. I'll send you pictures.
Thank you.
Okay, let's wrap this up. Any last questions, guys?
Yeah. Do you trade on the basis of the future chart or the index chart?
I prefer looking at the future chart, especially intraday, mainly because I have the support of volume, right? With the indices, you don't have volume. And plus, the big boys are looking at the future chart because that's what they're trading on, and that's what I'm trading on. I'm using FNO, so I look at the futures chart. However, there are plenty of traders like Betala, for example, uses the index instead. Whatever you're comfortable with, it's fine. It doesn't really make a difference. Hmm.
Hi, I had just one more question. While making the trading strategy, we have to keep in mind the risk management as well. Like what should be my lot size and how long I can keep my stop loss and all. So,
Okay. So, sorry for interrupting you,
Hmm.
but let me just clear this up. Lot size. What should the lot size be? Your lot size should be 1. That's it.
Okay.
Unless you're a profitable trader, over the course of 1 year, your lot size should be 1.
Okay.
Please keep in mind, most traders fail within the first 3 years. So your entire job as a beginner is to just not fail. Keep in mind that as long as you can always move up to 10 lots fairly easily, it's not a big amount of money. And if you have 10 lots, you can even if you're making if you're capturing like 10 nifty points every single day, every single trading session, you can make 1 lakh a month. Right? So it isn't really about the lot size for now. It's just about gaining the experience. So keep your lot size to 1, regardless of what your capital is, whether it's 50K, whether it's 50 lakhs. Keep your lot size at 1 until you figure out how to make money. Because once you figure it out, then you can easily increase the lot size and make more. Right? So instead, if you have a 50 lakh account and you're trading with 10 lots right now, you'll probably keep facing losses until you figure out how to actually trade. And once you do, you'll have to recoup all those losses. Instead, just trade with 1 lot. And whenever you feel comfortable, increase the lot size completely and you're good.
All right. Makes sense.
Please go on with the question.
No, it's fine. I got the idea.
Okay, great. Chalo. Guys, I'll wrap this up, yeah? Thank you for your time.
I just had one doubt.
Yeah. Last question. Yeah.
So basically, while I'm taking trades, my loss would be something like 1% of my entire trading account. So, but when I'm looking at the charts, say I want to take a trade in Nifty futures, and my stop loss ideally should be 50 points because there's a say support over there when I'm going long. So, in that case, 50 into 75, the lot size, like the losses which I'll be facing would be actually more than the 1%.
Yeah, then that's pretty clear. You can't trade in futures. You don't have the capital for it. You have to increase the capital or move
So,
on to options. Or if you can't, you have to move on to equity. I think if you don't have money with you, you can't really trade because your stop loss has to be at 50, whatever the safe resistance zone is. That's where your stop loss has to be. So if you have limited capital, your entire goal should currently be to increase your earning power, increase your earning potential, and then come back to the markets.
so how much would you recommend, like, for say if you want to trade in indices?
I mean, you can trade with any amount depending on how good you are, right? I mean, you can give Bitala a 50K account and he'll make money. Whoever, if I give the same 50K account to somebody else, a beginner, he'll probably blow their entire amount up in a couple of months. So it depends on how good you are. It also depends on what strategies you use. So if you're a scalper, for instance, your stop loss can be extremely small. Correct?
Yeah.
Yeah. However, if taking swing trades or reversal trades, especially, your stop loss might be pretty wide. So it depends. Like set size. I mean, for everything in trading, the answer will almost always be it depends. It depends on you. It depends on the way you trade. Yeah. Okay, so let me just wrap this up. Even about the assignment, please make sure you pick out indicators that you like, that you think work, and you think you'll have fun playing around with them. If you don't have fun with the process, you can't make money. If you don't enjoy what you're doing, you can't make money because it's so much work. You have to sit down every single day, look at the charts, look at your strategy, see what you could have done better, and you have to make this a continuous process. So you will basically lose money when the market conditions changes, and you'll lose a shit ton of money in that point. So please make sure the premises you use is something you personally believe in and you personally understand, right? If you guys have doubts, please just type it out and I'll try to get back to you. Okay, guys, I really need to leave now. Thank you. Good night.
Thanks a lot, Anish.